Brazil overtook the UK as the sixth largest economy in the world in terms of output in 2011. This represents an ongoing shift in the balance of output from the developed economies to the developing, with emerging markets such as Brazil, India, China and Russia all outgrowing the developed economies in the past decade. The UK represents an archetypal developed economy. Income is relatively high at around $36,000 per person, while the economy has a relatively strong infrastructure in place. The economy is services orientated, with 70% of GDP coming from this area. Financial services is of particular importance, with London being a global hub for financial transactions. The industry makes up 36% of GDP and has been one of the most dynamic sectors of the economy in the past 20 years. Brazil, on the other hand, has relatively low income levels with high income inequality. The economy is more diverse, however, with manufacturing, mining and agriculture making up larger proportions of GDP. In terms of growth, Brazil grew on average by 4% in real terms between 2003 and 2011, benefiting from a growing domestic market. Disposable incomes also grew significantly, with almost 20 million people being brought out from the $2 a day poverty line between 2001 and 2009. On top of this, growth in many of Brazil's export markets, including the Asia Pacific, further supported growth. The UK, on the other hand, has seen real per capita income stagnate over the past 10 years, as real GDP growth averaged just 1.4% between 2003 and 2011. Growth prior to the financial crisis was debt-led, with private savings fluctuating around zero. Consumers used credit to expand their consumption. Public debt also grew as the public sector expanded its reach in the economy. Brazil was more insulated from the financial crisis than the UK. Less reliance on its financial sector and less internationally integrated banks meant that it took until 2009 for the impacts to permeate through the Brazilian economy. In 2009, the economy contracted by 0.3%. However, strong spending on infrastructure and temporary tax cuts for much of its manufacturing industries allowed for a sharp rebound in growth. The financial crisis had a profound effect on the UK economy. Without government intervention, many of the UK's major banks faced bankruptcy, while attempts to stimulate the economy increased public debt. High levels of bad debt in the financial sector, high levels of public debt, as well as low consumer confidence, has acted to subdue the UK economy in the last 3.5 years. On top of this, the ongoing Eurozone crisis has acted to reduce exports to some of the UK's major exporting markets. Persistent unemployment, low levels of consumer confidence and low levels of investor confidence has meant that the UK is yet to return to output levels seen prior to 2008. Global output growth is set to slow in 2012. However, as part of the build-up to the 2014 World Cup and 2016 Olympics hosted by Brazil, infrastructure spending is set to grow, supporting short-term growth. While high disposable incomes and a growing domestic market is set to support growth at an average rate of 4% a year between now and 2020. There are, however, some risks in the Brazilian economy. A relatively small and uncompetitive manufacturing sector sets Brazil apart from some of the other emerging economies such as China and India, while dependence on the international capital markets for investment funds offers some downside risks for the Brazilian economy. The UK is expected to have a protracted recovery. Persistent unemployment, low levels of investor confidence, and austerity measures mean that it is unlikely that the UK is going to return to growth above 2% a year before 2013. This is a consistent theme across the world. Growth in the developing economies and slow and protracted recoveries in the developed countries. As a result, Euromonitor International expects a continued shift in the balance of output from the developed to the developing countries, with the four major emerging markets, Brazil, Russia, India and China, expected to make up 4 of the top 7 economies in terms of output in 2020.